Morning, everyone. I'm Nilesh Joshi, Head of Equity Research at MarketSmith India. And it's a great privilege to have Samir Arora with us today for Walk the Stock and this episode on discussing macros, Indian markets, and the way ahead. First of all, I presume that all of you are safe, healthy, and that continue doing so and vaccinate yourself at the earliest whenever you get the chance. Samir obviously needs no introduction. He's been with the equity markets for decades. He's seen bull runs, he's seen bear runs, he's managed billions in terms of assets under management. He's gone through various commodities as well. So I think he knows each and every commodity cycle through the decades of experience that he carries. He's managing funds at Helios at this point of time. And it's a great privilege and honor to have Samir amongst us to discuss his thoughts and views on global macros, Indian macros, and the equity markets and the positioning ahead as well. So welcome, Samir. Thank you so much for taking time out.
Thank you very much. Many people say I'm the oldest guy in the markets. I say, no, not oldest, experienced. But you didn't say that, so it's good.
So I think, Samir, age and wine, you get that. So I think before we start, first of all, everything okay at Singapore, Samir, in terms of
So Singapore was recently ranked second best country in the world to be in lockdown time. Actually, a week before, it was number one. Then, because there were a few cases now, New Zealand has become number one. So that way, Singapore is very good. But, my family, my friends, my employees of Helios are all in India, or quite a few are in India, not all. And therefore, if anything happens there, it is as bad. But Singapore per se is pretty safe and okay.
Good to hear that, Samir. Okay, so let's jump directly to what we had in mind today. A blockbuster year, FY21, markets at an all-time high. The people on the sidelines, Samir, are still wondering whether we should get in or not. This should have obviously gotten buster itself. But looking at the macros, now when I talk about macros, let's start with the global macros at this point of time. What is happening in terms of the debt to GDP ratios for a lot of developed economies at an all-time high? You're probably seeing economic activity come back with a roar in the US markets. UK is opening up, Europe is opening up, vaccination drive is on the full. So how do you see in terms of the underlying macros, the way ahead for equity markets, specifically in lieu of FY21 to FY22?
So I guess we are first talking about global markets. So, we also run a global fund. And we are still very bullish, primarily because we have been promised continuation of this liquidity. So, for example, in our global fund, we have 99.7% invested. And even if we get a new idea, we say, oh God, now we can't buy unless somebody gives us new money because we don't feel like selling what we have. But the thing is that this is the time. You can't leave these things early. This is where the Federal Reserve is saying that I don't expect to raise rates and separate for about 2 years. And even though inflation goes beyond 2%, we will treat it as transient, because the normal thing was that you will act ahead of time. That means if you think it is going beyond 2%, you will start reacting. Now they're saying if it crosses 2%, we will still analyze it. And as far as today is concerned, we believe that it will be transient. In fact, this 6 trillion package, which I don't think will be approved in any way, but that package assumes even today that after this 6 trillion and whatever the GDP of US is debt to GDP is, I think, more than 120% or something, that they still think it will be 2%. Now, in the end, it may or may not be. But who am I today to say that I know so much about this part of the story, that inflation will, but one day it will be a problem. Let's see. But today the logic is that globalization brings down prices or inflation, and the inflation is only in those things which you can't bring down with globalization. For example, US healthcare or US education or things, or where you can't do anything whether China or India is willing to do that cheaply or not. But in other things, the price declines in your day-to-day stuff is quite high or whatever. So bottom line is we are bullish on that. India per se doesn't have any independent stance in this, except that I have a lot of data now to show that India is getting a separate allocation from FIIs, like previously China was getting. which means that we are not just getting it because they are choosing to invest internationally, or they are choosing to invest abroad, or they are choosing to invest in emerging markets. How? Because the money that India is getting is disproportionate to the money that a similar country with we know the weightage of India in the index.
Yeah.
We know the weightage of Korea, Taiwan. So if they were giving it as a big picture macro bet, then Korea should get X% more than India. But it is not getting like that, or Taiwan, or all these countries. So that is the other hope from a foreign point of view.
Great. No, so I think, Samir, the point that you laid out, right, till the time it is good, and you can't challenge the Fed, right, when it's printing money and when liquidity is at such an all-time high. But the outside risk, as you're saying and pointing out, inflationary risks are beyond 2% for the US as a market. The bond yields, which has become a very hot topic, right, last few weeks and months.
Correct.
So everybody's tracking the Dow and the DAX, and bond yields has now suddenly become a hot topic to track. And liquidity, at some point, it will get withdrawn. So are you trying to hint that all sectors that are probably getting benefited with this liquidity push, we should still continue investing at this point of time, and then probably take cues in the next few months in terms of how the Fed is acting?
No, so first thing is that there are some more reasons you can give to why the interest rate USA is not a worry today. Because the thing is that if we say that the US economy and the US jobs and all one day will be higher than pre-COVID.
Sure.
Okay, so their unemployment, I think some 6%, which they say 3.5% is good. So if all that is going and they are waiting for that, then it is unfair to say that the interest rate should be lower than what they were pre-COVID. So pre-COVID, US 10-year was at 2%.
Correct.
Now it is at 1.5 something or 1.6. So in theory, why should the world panic if GDP is going to cross pre-COVID level, if index has already crossed or whatever markets have crossed, then why interest rates cannot at least reach 2%? So I say till 2.25, so we don't have to worry. There are numerous instances in the past where US interest rates have gone up and the markets have gone up. The most recent case was in 2003 to 7. They had 17 consecutive 25 basis points increase. And that was the biggest bull run in the world. So interest rate hike because of growth and all is part of the game. If it is interest rate hike because there is inflation but no growth, then you are supposed to, in theory, worry more. But who knows? But your question was whether we should buy the sectors that are benefiting. We don't look at that. We are just saying market is strong.
Sure.
Stocks, we will buy only what we like. For example, we don't really buy. You said commodity. Actually, I don't buy too many commodity stocks, as I said. So the point is, we will not react to that part. Then who knows now which stock they are buying in India because of that. All the commodity prices have gone up. So this is more as a backdrop for our long short India fund, that what should be our net. Not that we can precisely connect these things, but the idea is that we are bullish in general, but the stock selection will be based on whatever we like bottom up.
Absolutely.
Not related to any flow related, because who knows where that flow is going exactly or that precisely.
Absolutely. No, so in terms of asset allocation, then, in terms of the sector diversification that you've got, how much proportion is in equities, Samir, in terms of your asset allocation? How much probably goes into other commodity classes?
So now you are talking about Mr. Samir Arora or Helios fund, because my fund is only equity, right? So there's no concept of asset allocation. The investor has made the asset allocation. And because we are mostly catering to foreign audience, he has given like 2% to India, maybe, right? Because India's weightage is some 0.5%. So that is not we have to say that India should deserve a separate allocation. But if you're talking of me as an individual, because we are talking to individuals, the difference is that because I'm an NRI, I have a large non-India equity allocation. But otherwise, the Indian guys normally have 100% in India, or in equities in India, I mean. And we would say to anybody who asks us, we say you can put 10, 20% outside India in terms of buying some local mutual fund which invests abroad and all, because those stocks are really good. But in terms of equity debt now, I used to have 15, 20% debt. And last year I converted nearly all of it to gold.
Oh, okay.
Thinking that the interest rates for my dollar denominated debt is now near zero.
Sure.
So I assumed or thought or projected or analyzed that gold might do better It has done marginally better. Like it's up 6% or something since I bought it. But that's okay. I don't, because I'm a 100% equity guy in India and global. I have maybe 80 odd percent in equity for me personally, but not 100%. I don't like 100%.
Yeah, so I think Samir and equities, I think that goes in sync.
Yeah, of course. Yeah.
Now, the other big thing and the other talking point last few days and weeks was crypto, Samir. I think I'd like to have your views on that as well. Elon Musk's tweets, crypto reacts. What is your view on crypto?
So the thing is, crypto is a big word. The question is Bitcoin, because what happens is, because when I make fun of Bitcoin on Twitter, suddenly somebody will say, but now we're talking about Ethereum. I said, मैं तो Bitcoin की price की बात कर रहा था. Then suddenly somebody will say, why did you not talk about Dogecoin? I said, first we have to pronounce it correctly. We don't know, is it Dogecoin or Dogecoin? पता ही नहीं, किसी ने बताया नहीं आज तक. So the bottom line is, I am not a crypto guy, because the problem is there are 10,000 such whatever crypto coins or whatever they are called, and you don't know exactly the biggest one in the end will be what. As I read recently, Facebook was the 11th the social media company or whatever. उससे पहले बहुत आई थी, and वो बंद. So Bitcoin की price से ही मैं relate करता हूँ. It looks too obscene to me, because till today, when you ask, because on Twitter I deliberately needle all these guys. It was so much fun. So I'll say, oh, Bitcoin to gaya or some. So they will say, अरे blockchain technology, you have not understood. मैंने कहा, मैं blockchain technology की बात ही नहीं कर रहा. The point is, we are only talking as an investor in the price and which one will you buy. And I think you should buy none of them. But if you want to punt, buy 2-3%. But the other thing is that today the price of Bitcoin is say 35,000, 40,000. So now if you ask the most aggressive guy, he will dream and get you $1 million, right?
Yeah.
There is nothing 30 bagger. Because I am sure that, and nobody's saying put 20% in Bitcoin. So they say put 2-3% in Bitcoin or 4%. So even one of my stocks, which has 2-3-4%, I don't know which one, will be up 20-30 times in 10 years. Because in every portfolio, if you have 30 stocks, some 2-3 stocks go up at least 10-20 times. So now that scale is not so this thing that I must say, oh God, what are these guys doing? My market, not the whole market, but some stock from my market will do as well as Bitcoin. And unless somebody's 100% in Bitcoin, I don't care for him. If he's buying 2% and making a noise, who cares? So not into it.
Absolutely. No, and I go through your tweets almost on a daily basis. So I think it's fun to read your tweets.
You see, when you have nothing to do and you just want to needle the world, you can say Bitcoin. The fun, see, enjoy the fun.
Okay. So Samir, I think you're sitting in Singapore, right? You're speaking and interacting with a lot of FIs who are interested in India. You're dealing on behalf of them as well. So with the partial lockdowns that are now happening in the economy as a whole, do you see that as an outside risk, both in terms of the annualized GDP, where downgrades have already started coming through, or some sort of an outside risk in terms of our capacity is probably not to increase our fiscal balance sheets because of the sheer reason that we can't, right? So any outside risk to earnings from that perspective?
So, India first risk, I got it right, but it didn't help much, which was I was saying from November, December that India will not vaccinate on time, not because I knew the numbers, but as a risk. As a big picture risk, vaccination may not happen on time, more qualitative rather than exactly counting the number of doses that we had, but that the world has ignored. I mean, world means we have ignored or we have discounted. So I think the reason for that part is basically because people believe that they know the end game. The end game is that plus minus 4 months, you will get a large part of the at least plus 45 first vaccinated, and then it will reduce pressure on the hospital. So even if some people land, because not everybody has not died because of COVID, they have died because of lack of basic healthcare, which the same healthcare system can handle people if less people went to the. So anybody gets vaccinated, it helps the other person because it reduces potential pressure on the system. So that part, I think that is why the markets are ignoring. Although I think within the same market, different stocks will have very, very different short-term future, if not long-term future, because this will affect consumer confidence. It will affect consumer savings. It will affect your willingness to splurge because you may be worried about healthcare costs, and in theory you may be worried about a third wave at the back of the mind. Plus, if in your building people are dying, you're not going to buy high definition TVs for a few weeks, as somebody is in trouble in the family or even in the building. So all those things will matter. But your question is that whether in general, because of government issues, well, what worse can government do? I mean, it's nothing is happening from that side to feel that we are overly dependent on them. The only thing that we want from them is now, from a stock market point of view, that some privatization happens.
Yeah.
So that we can project that the balanced privatizations will happen. Because if the first one or two, like BPCL or Air India and all, don't happen, then the theory that we'll be able to sell off a bank might become more into the future, maybe 1 year later or in the next fiscal or whatever. So you just want some progress, actual money in the pocket progress. Beyond that, from a stock market point of view, there's nothing much that we want from them.
Absolutely. Absolutely. And coming to your point on privatization, Samir, I think BPCL, right? The initial 2 steps have got cleared. There is talk, as you said, on some privatization of PSU banks. But is there fear at the back of the head for any investor who's coming in, right? A, government regulations still control the overall sectors as a whole. And B, what happens in terms of legacy issues that all of these carry, plus the issues related to unions, trade unions, so on and so forth.
So people who buy these stocks worry. I don't buy it. Even if they say that tomorrow it is being privatized, I don't buy it. I haven't bought it. Normally, tell me who in the world would say that we are about to sell this stock strategically in a few weeks. It'll be sold at a premium. There'll be an open offer. We say, thank you very much. We are happy to buy ICICI Bank or something. So that is the test. But the thing is that just look at it in a big picture sense, that only 2 months ago or whatever, 4 months ago in March, knowing that there'll be a privatization, knowing that there'll be a bid at a premium, BPCL sold their treasury shares at some, let's say even 3% discount or some 2%, whatever discount, or at market price to investors, knowing that in 3 months there'll be a bid.
Absolutely.
For what reason? It's not a normal investing world. So yeah, we don't have it. We don't plan to have it. We only wish luck. So my logic in big picture has been that we are sufficiently bullish on India, not to be over bullish. Over bullish means that you expect the toughest things to happen. You want infrastructure projects to happen on time. You want infrastructure companies to get paid on their dues. You want some guy who's got land for it to be converted to a real estate building and sold, and he doesn't blow up on the way. That is being over bullish. Most probably what will happen is these things which are over bullish will not happen, but the country will move on. But suppose once in a while, actually a successful privatization happens, then the guy who's bought BPCL will make 10% more on his small position.
Yeah.
But we will also make in a big picture sense, because this itself would be such a big deal. But I don't have to do it. I am sufficiently bullish not to be over bullish.
Yeah, so Samir Arora is cautiously optimistic. Should we put it that way?
No. I am optimistic. I'm just not optimistic on all these complicated things in life. And I don't have to be, because I'm playing on the fact that major parts will happen with and without these big events or these complicated events. And that is a good enough. And plus, mostly if the whole market benefits, if the whole economy benefits, we will also benefit without directly being there. I mean, in that stock, I mean.
Oh, absolutely. So I think in terms of allocation, right, Samir, the viewpoint of FI is towards India at this point of time, with all the facets that you've put through. Does it remain optimistic over the longer period of time? Are they still bullish on India?
They are bullish right now. They are very bullish. As I was saying, I have for all, but these 4 years I saw in a presentation from Goldman Sachs. So from 17, 18, 19, 20 and 21 year to date, calendar year to date. And in all these years, India has got disproportionate amount of FII money when compared to other countries. So that means the FIIs who have a choice which country to go, they have to put equity. Well, let's say these are equity guys. They are not doing it randomly that, oh, dollar is weakening, so I'm investing internationally. Because if they did that, then India's proportion and that would be very small. India has got disproportionate which means it is an active bet. There's nothing more complicated than that.
Absolutely.
Second thing is you can see it also in these private. You see, now we have more than $100 billion, these unicorns. And we have only some 350 listed billion-dollar companies. So somebody somewhere has funded, well, none of the Indians have funded. These guys have funded these companies and they have created or helped create 1/3 of the listed guys. Now, some of them in the end may turn out to be not, able to go public or whatever happens. But generally, that means that money both on private and on this thing has come in. Yeah. So it is being actively preferred right now. India is.
Great. Now, Samir, apparently RBI, if you would have read through a lot of newspaper articles, they just had a warning.
They said it's a bubble. Bubble.
What's your take on it?
No, so I have, by the way, just to tell you that I have never, in the olden days, in the 90s when I was a fund manager, I never even used to know that today is the interest rate policy. So, because those days were I beat the market for 10 years by 32% per annum.
Wow.
And in those days, inflation also you would read in the newspaper. So one dead guy used to report to me at Alliance. So I said, क्या हो गया? कहता है, sir, today is the interest rate policy. तो मैं कहा, फिर क्या हो गया? कहता है, शायद 25 basis point बढ़ जाएगा. मैं कहा, ऐसी छोटी-छोटी बातों की फिक्र ना किया कर यार, तू यार मेरे पूरा चल रहा है. This was the 98, 99. We were going up like 5% a day. Okay? Like my Z went up 100 times in 2 years. Every day it would go up, limit up 8%. और वो बेचारा 25 basis point की बातें कर रहा है. But what has happened is in this new last 10, 15 years, this over analysis of, so that of course now we have to do also. But this, I didn't even read the whole thing to say what context it was said in. These things we have ignored all our life. By the way, Greenspan said it there when he said irrational exuberance in 96. And the bull run ended in 2000 March. Leave it. Don't worry so much.
Absolutely, Samir Paji. In fact, एक joke चल रहा था before the budget and after the budget. तो budget के पहले ऐसे बोला जाता है कि there are 125 economists in the country. A couple of days after the budget, there are 1,000 economists in the country.
Correct. But this they are talking about RBI, not some individual economist.
No,
but still, no. But there is one negative you can say. One negative you can say, which you won't know what to do with it, is that if RBI thinks it's a bubble, then if it were to correct, RBI in theory will bother less, saying it was deserved.
Yeah.
You see, if RBI thinks that it is unfair because it will affect economy, it'll affect capital creation or investment, then they have to worry more. But if they in their mind feel it is a bubble and it corrects, they don't have to come to inject liquidity and all that because they themselves said it is. So that way you can say, but what to do with it every day? So we just move on with our life.
Absolutely. Point taken. In fact, Uday Kotak also came out with a statement that government should do fiscal spending. There were news reports that government might find a second package as well. How do you see that panning out? Because if that does happen, does it put more?
No, I don't. I have stopped all that. I am older than Uday Kotak. Later he will also change. The thing is that if you see all these packages, they say you can borrow from us. Us means from the banking system or whatever, right? So they are not really giving any money to anybody. They just say, okay, you have the right to borrow at 2% lower interest rate. In Singapore, they have actually just paid out like $50-60 billion. So our company, without asking, just by the number of employees, got in the bank, direct in the bank, because here everything is this thing, 60,000 Singapore dollars, which we then donated back to the Singapore government. Many people donated, like they said in the paper, 600 companies gave it back because we didn't lose jobs or anything. But $60,000 just came. For what? Wow. So then, now they are saying this month we will get half the month rent directly in the bill. And we have to talk about business, not personal. Just directly to be paid because they know how much rent we are paying. So 15 days ka rent they will give back to all the tenant companies. So that is called whatever subsidy, not subsidy. I mean some bailout or whatever you want to call it for us, but not that okay you can borrow at 2% lower or 1% higher. So I don't believe that any of the packages in the past have made a difference to any of those companies. So what are we looking forward to? If it happens, great. As we say, if something helps the system or people, great. But don't believe that to invest, because now half these things happen and then nobody knows what it means. Just like I stopped about 10 years ago when they say we are investing in education or healthcare.
Yeah.
Now, previously we used to start looking what does it, which hospital. Now we say God knows where it's going. Nobody knows, and nobody has ever figured out how did it help. But qualitatively and implicitly, it might be helping. Obviously, like if you're sending money, but you can't relate to it from a stock point of view.
Absolutely.
That this stock therefore is good, and I'm only interested in that sense in stocks and in a big picture in the market.
Oh, absolutely.
So let Mr. Kotak say, he should say, because at a big picture level it will help the banking system.
Yeah.
But what policy, for whom? If they say for somebody who was already getting that, what is another thing called, where the MSME guys get a guarantee from the government, enhanced something policy.
Yeah.
So who knows?
No, absolutely. So Samir, coming to your point again, I think there is a lot of talk in the market in the last few weeks and a lot of action in terms of the unlock trades that are happening: hospitality, restaurants, aviation. How do you view these unlock trades? I think, do you think that will really make sense?
So we played last year. So what happened, if you just to give an example, Indian hotels in February of 2020 was 145 or so, or 150. And we were not buying it. I mean, if we had to buy it, we could have. So then what happened, it went down to some 75, 80 rupees, I think in July, August or something. So we bought on the basis that if 3 years later, the COVID has gone away and you get back to Feb 2020 price, you would have made like 80, 90%, which is a great return. But the markets went up so much that in November, if you remember, all these stocks went up 30, 40%.
Yeah.
So at the end of November, the stock had gone to 120.
Yeah.
So then we sold it off saying, "Arey bhai, 145 we were not buying it pre-COVID. And now 120. Okay, now I think it's some 120, 130.
Yeah.
So the thing is, if you look at airline, if the stock has not fallen, what do you mean by unlock trade? Unlock, it has fallen, and now this will happen, and therefore will go back. So, and if you look at US, so I used to own Airbnb personally as an unlisted stock. It, as soon as the unlock has actually happened, the stock is down. The stock was 190 1 month ago. Now it's 140. So actually, and airline with my problem is that the stock has not fallen for it to be called as an unlock. But we have like these best life, chest life type, which we in our mind says unlock, although we had it forever. I mean, like 3-4 years. So there could be some, but first the stock has to be down.
Yes.
In theory, and then they should change its life, the unlock, and then it goes up again. But if the stock has not fallen, then the other one, which is like that, you could say is the movie theater chain.
Yeah.
So I won't give the name, but there are only two. So I totally reject, because I think they have been disrupted and they don't know it yet. And they know it. They're just saying that they don't know it. And the thing is, they say, "Oh, but how will you see a Salman Khan movie at home?" Now look at how much pain has been saved for 1 billion people because the theater was locked and they didn't have to go and see Radhe in hall. So how much, kitna benefit to society hua hai in that. But the other thing is that if you have a theater only catering to big movies, like 1983 or something, whatever, that is not the model of the theater. It has to have 52 movies.
Absolutely.
It can't say the big movie you will not be able to see at home. It won't be on your OTT. But Ayushmann Khurrana movie will be on OTT in 1 week. Even if it's a good movie, because it'll be a low-cost movie, so guys will buy it after 2 weeks, right?
Okay.
So you can't run only on the super big hits being the only thing which is driving you, which will drive you.
Yeah, absolutely.
But the theater cannot sustain itself on having, one movie a month. They have to have every week a new content. So absolutely. I think that is also gone. So I'm not overly, we are assuming that these private banks and these banks are implicitly unlock trade because they are sort of the cyclical part, in a small cyclical part. And so they are going to play the unlock trade for us if that becomes.
In fact, the issue, Samir, is that every sector now gets clubbed as an unlock trade.
Gas correct.
Gas ka chalo ho jayega, to gas companies is an unlock trade.
Correct.
But the discretionary part of the unlock trade, right? Are you looking at liquor stocks? Are you looking at the footwear companies, apparel makers? Because they've obviously got hit in this second wave as well. Do you see pent-up demand?
But there are not very many listed. For example, we are now against the work from home wale. These consumer durables, according to us, will be hit for two reasons. One is that the first phase of work from home has happened. So if you needed a TV, fridge, because you needed a laptop for your kid, that is over now. You can't play the second thing. Same thing. Second is, look at the commodity prices. And all these are very much having commodity as the input. So for example, for all these guys, 25-30% would be pure material cost. Not total this thing, but just the actual commodity bought. About 25%. This month, I believe copper is up some 40% or something. I read. How much can you pass on? Because nobody used to buy. So if you're selling copper wire, you have they sell copper wire. I mean, they sell other things also. I'm talking about one item. Can you increase the price 40% in 1 month? Even though the other guy might say that the building wire cost is very low, so it won't matter to the project. But just the fact of you are going and you say last month it was this price, how does it work? It doesn't work so straightforward. So in these commodity prices, plus that these 2 months they'll be locked down, plus little bit of buying power will be less, because whatever you say, if you are now sitting at home for a year compared to first time for 2 months, then it was more of also a bit of fun that you were at home and that you were, with the family or whatever. Now that is gone and you would be burnt out in terms of just staying at home. So plus money will be less, because either you have got less income or no income, or your job is there, but everybody is a bit tight in terms of increments and all. So consumer durable ka to hame samajh aa gaya. Your question was also on this
footwear, liquor, and the other.
Footwear. How possible little bit that in the first round, people will go out and buy because they've been sitting at home. But I think the easier one I found is my restaurant wale, Westlife types. Reason being, nothing else. You go to the mall to enjoy and at least have food there or something, which might be a simpler thing than, but yeah, somebody could go. But which food? I mean, those companies, they are not real growth companies otherwise to play just a, one-off trade. It's okay. Could be. They could be.
Then what about baggage companies, VIP safaris of the world?
Oh, this is too much. We don't do all this. We are not. We are very simple guys. We don't overanalyze that. We have not reached that even in the bullish days of our life. Nah, we don't have. But maybe they will. See, there are thousands of companies. We are not having a view on every line, and we don't even bother with them. That could be.
Yeah. So you touched base, Samir, on commodities, right? So I want.
By the way, do you know that these baggage companies, luggage companies, do you know that some 30-40% has nothing to do with travel?
Yes.
Okay, what does it have to do with? Tell me.
Storing.
Storing in marriage. So they give you the dresses and sarees and all.
Exactly.
Particularly in rural India, they do it for that. Yeah. So who knows? Maybe they were storing more or less. Who knows?
Absolutely. So coming to your point on commodities, Samir, how do you see the commodity cycle now? Both ferrous, non-ferrous. Are we in the middle of cycle? Is the cycle yet to explode in terms of demand? I mean,
we don't do commodity companies. We broadly invest in our life only in two companies, if at all. One is Tata Steel, one is Hindalco. And that is to cover yourself because you can't handle it going up. But now the big picture that I've understood for steel and all is that supposedly China wants to, like they did for chemicals, they are wanting to not waste their time on this because they think either A, it's environmentally unfriendly or something, and B, they may be thinking it's low value add for them. But they are actively controlling, or over time going to control production of steel for exporting to the world.
Yeah.
So that is what gives it a bit more sustainability in that sense. Beyond that, we have no view on this, but it is clear that commodity stocks, I don't know commodity stocks, but commodity prices will be strong if we believe that the US guys are now the new guys putting money for infra. China may not be, but people had already maybe built that in, that China is going to slow down the infra, and nobody knew who will pick that up. And so now US is stepping up. And therefore, I think this new round has happened. Plus, it's like if you are able to drive Bitcoin up so much on the basis that the dollar will go down, then little bit it'll affect on commodities also, no? Because all of them are in the same category, but one is super high beta, whatever you want to call it, and then gold might be at the lower end of that.
Sure.
So it can't be that one asset is going up 100% and the others won't move. So I think this is all one bet, but at different levels of beta, which is an anti-dollar. I mean, one more factor. One is, of course, US could be an anti-dollar bet, in which case commodities are considered good. But from an India point of view, I don't like a commodity rally, because commodity rally actually hurts India as a market itself.
Okay.
Because India is a net importer of commodities, and generally India has to spend on infra. So if they have to spend more, that also hurts. But from an EPS point of view, the swings in Tata Steel and all are so high that suddenly it looks a great help to the EPS of the index. But beyond that, it doesn't help much. But I don't have a very strong views on this, because we don't normally buy them. We only buy them when we are desperate. And when we buy them just to say buy 5% and stop irritating me, the stock falls.
So what is your view, Samir? I think what are the top 3 sectors over the next few quarters that one can look at?
So for us, it is not for 3 quarters. We only invest in 3 sectors. First is private sector banks.
Okay.
Except that these days, State Bank is our second largest holding. And first is ICICI Bank. Normally, HDFC Bank used to be. But HDFC Bank, because it has underperformed, has become third, because they were all similar. So we will always have private sector banks right at the top. But once in a while, like the State Bank. The other we like is IT Pharma. Actually, it was first IT, then it became IT Pharma, then it became IT Pharma Specialty Chemicals. All are one concept, which is exporter, less competition from China, or China actively letting you, like in specialty chemicals, more of an engineering type thing, and less of this mass manufacture kind of thing where labor is very big part, and then we again goof up on that, or where big infra is required and so on. And the third is consumer. In that consumer, it is where we have become on this consumer durable part less. And we've shorted also a few, because we have to short. But generally, these are the 3. Then some stocks go outside this theme, which is around 10 odd percent. In today's context, number 1 in that is State Bank, which is not in our theme, because we say private sector.
Yeah.
But we've got SBI,
No, but great set of numbers, Samir, State Bank posted.
Yeah. We've had them now since October, November, we have it, or maybe September, October,
So I think the trajectory still, the upside still exists for State Bank, even from the current.
So the thing is, we in our top holdings, we are not saying that they should give the highest return.
Okay.
We say it should beat the market properly, but they are not going to be multi-bagger. Multi-bagger will, so we divide their stock into 2 categories. One is high confidence in reasonable return.
Okay.
And one is reasonable confidence in high return. We do not have a category which is high confidence in high return. Although 2 of these, I feel high confidence in high return, but we don't have that category. So we have to just push it ourselves into one of these 2. So whatever, like for example, HDFC Bank, we never imagined or expected to be high return, but we want high confidence in reasonable return.
Yeah.
Which means these stocks are known, like TCS or HDFC Bank or even Kotak Bank. These stocks are known, and you are not discovering them. You don't know anything more materially different from others, but you have chosen them from the universe based on whatever management and opportunity, but you only want the earnings to be given to you. You don't think that there should be a higher and higher rating for the same earning. In fact, the fear will be that you will get less than the earnings, but it should not be so bad that but then there's the as in contrast to companies which for the last 10 years have grown their earnings at say 10%, but the stock is up 25% per annum. There, that if you think that the earnings will be up to 15%, there is no reason to overly believe that even the stock price will go up 15%. So that and the second is reasonable confidence in high return, which is where you are a little early, or you're buying a beaten up, like we bought Indian Hotel, except that it went up very fast, so we sold it already. So those are reasonable confidence in high return. But you will then, because the confidence is reasonable only because there is something wrong happening, you will buy a little less of it, like 2% instead of buying 5% of the fund.
Absolutely. What about the middle private sector bank or the mid-cap private sector banks? What's your view on those parts? I mean, banks like an IDFC First or a Federal, Samir, as an example, right? There have always been potential but never delivered.
So we are okay. Thank you very much. We don't need all that. We don't need all these. In the olden days, used to think that I have to make higher return than personal money of the speculator. Now I don't feel that. I'm okay. Yeah. I want consistency, but that is the real angle.
So, Samir, what is the definition of a high return? What is a high return percentage?
High return would be so high return in today's context will be 25%. Today, the market cannot give you more than 13-15% in an annualized way. How is that? So the theory is that the equity market gives 5 to 6% more return than the long bond of the same market or the same country. So this data I wrote in Outlook also recently, that there's this book and all, you can see 16 countries they have and all that, but everybody knows that this is called the equity risk premium. So if in India the 10-year is some 6 odd, then you will make some 12% from the market index, in theory, long-term annualized. And therefore, if you go up 15-16%, that is like market, but little more, which is what I think these HDFC Bank type guys can do. And then if you can do 25-30%, then that is high return. And that is high return in today's context, because the nominal growth of the economy has come down. Previously, we used to have, say, 7-8% GDP plus 7-8% inflation.
Correct.
So हमारी economy rupee terms में 15% कर रही है. So how can you expect? Now, the nominal growth, because growth also came down and inflation also came down, which might be connected. So the वही 10% growth है.
True.
So then you can't grow 20% for the whole market. You cannot grow.
Absolutely. Now within IT, Samir, I think that's become a consensus trade, right, for the last few months or quarters itself. So within IT, what's your preference? Is it large cap? Are you market cap agnostic? Is it mid cap?
We are market agnostic, but in most sectors where the large cap does an adequate job, then you buy one or two, like we have this L&T wala, whatever. I don't give all the names, but basically we are into the simple ones in IT. But IT I like, because if you look at the IT returns, just pure numbers, growth year by year, ROC, ROE, they are only 5 times better than all your consumer companies.
Sure.
Okay. You look at, say, Asian Paints, 10-year earnings revenue growth is 10%, which is less than GDP growth of the country in nominal terms. Okay, but so हमारा TCS tie will grow 20%, 15%, 18%. ROC, ROE उसके भी 30s में, इसके भी कोई 30-40 में, वो बेचारा 30p पे चलता है, वो 90p पे चलता है, because you call that consumer, and this is calling IT. But 10 years ले लो, 50 तो I think उसका list ही नहीं हुआ होगा शायद TCS, but forever it's been growing at a higher rate than all these guys, and even today it doesn't look that it is going to grow less than these guys or any of these. They're not particularly in general. So we like consistency, same high numbers what come from a tech, from a consumer staple type company or a consumer company of 30-40% ROE and cash and dividends and buybacks. So what else do you need? Plus second thing is we have it is poor man's tech for us, because we can't buy वहाँ पे Google and Amazon and Facebook and all that.
Yeah,
So indirectly, they can be the play for us.
absolutely. Samir, what about these extension players for IT? All these platform players, India Marts, Apples, Route Mobile types. How do you view those?
So one of them we were Anchor, which is Apple. उसमें तो बड़े पैसे बन गए हैं हमारे.
Oh, okay.
अभी we have it. But the other one we bought last year and we've sold it in Feb because it went to 8,000 something. I mean, I think there is a limit to what is a platform. There is a limit. Everything is a platform. नहीं होता ना. कोई price की कुछ तो sanctity होनी चाहिए. Yeah, but theoretically it is a good thing, but not everything is a platform. So which one are you saying is a platform? I don't think India Mart is a platform, by the way. I mean, you can say it's a platform, but the platform is not that. You see, the platform is अपने आप content बनाओ, वो अपने आप खरीदे और आपको पैसे भेज दे. ये नहीं है ना. You have to sell the subscription.
No,
the real platform is a very different game. Now, one guy is asking, what do you think of India, whatever, India Exchange? India Exchange that we have.
India
Iyer. Okay, next question. What, Hanji?
Samir Paji, I think pharma. You spoke about pharma, right? Now, some part of the allocation in pharma and some analysts are of the belief that maybe the next 2 quarters, once COVID is over, right, we'll largely come back to pre-COVID earnings, which has been quite okay for the sector as a whole. So I think how do you view pharma from?
So we have pharma. We have now 4 companies, totally about 12%. 3% की हमारी 4 है. 2 चल गई हैं काफी, 2 ठीक है, standard type है. So the thing in big picture is that there is going to be increased talk and allocation to healthcare pharma because of now after this everything you will take double and triple precaution. Government will have to step up healthcare costs. Public will be more conscious and buy the basic stuff or generally do it. So it's okay. I don't think these are multi-baggers now. We had one, वो हमारा चल गया, कौन सा वो Lawrence Labs चल गया एक, जो ज़्यादा चल गया. I mean, others were only normal, by the time we bought them. But the point is that, we will keep them for now. I mean, at least as of now, in our office morning meetings, nobody has said कि ये pharma का क्या करा जाए kind of. So we have them and we'll keep them till they go, till things happen. But I don't have a very strong view in that. But मुझे लगता है कि the top-down view will be positive towards pharma because of general talk all the time for the next many years on that India has spending 1.5% and other countries are spending 8-10%. I think US is spending 15%. So we also have one hospital. Those hospitals have been affected because people are not going for normal treatment right now. Sure. They are trying to avoid going. So these costly things that you do, कोई ये हो रहा है, प्लांट हो रहा है, पता नहीं क्या क्या, जो भी गंदी गंदी चीजें होती हैं हॉस्पिटल में. So those things will hopefully happen.
Yeah, so that was my question, and you answered that on the hospital itself. One more extension on that, Samir, in terms of the fear psychosis that plays out, right? So insurance players, are they good bets as well?
So we have them because the logic, actually, when we said private sector banks, actually, technically, that is not our bet. We said go into sectors that compete with government companies.
Okay.
Because I know I have seen it firsthand in our alliance where we became the biggest mutual fund manager of India. We were like 5-6 times bigger than HDFC. So that happened because we were all competing with UTI.
Yeah.
And it was very easy competition, not on performance, because initially when we started, we didn't know what the performance would be. Who knew it'll work out well. So we said what we'll do is we will send out monthly full portfolio. By the way, Alliance Capital was the first one in India to do
it. Wow.
Even in US, it is not done. It is quarterly. And UTI used to give once a year.
Yes.
And in 6 months, they used to put, I think, top 10 holdings. And after the year, annual report will come, which will come 2-3 months after the year is over. And in that, you can see the full portfolio. So we said, ये तो बड़ा आसान है, we will disclose it monthly. And that was our small starting point, being a full portfolio disclosure, right? Then performance अच्छी होगी तो बाद में पता लगा. So the point is, we have always believed in compete with government. So उसमें हमने Z में बनाए, Bharti, all these. And in 2005, when we started Helios, one of the first companies we bought is Indian Rayon. Because Indian Rayon used to own Sun Capital, ye apna Aditya Birla Sun
Birla
Life insurance. It had a larger part of insurance, some 30-40% of its sum of parts. So we have, from that concept only, this private sector banks has come. So we will always have private insurance companies as part of that theme. We will consider Apollo Hospital as part of competing with government, because the belief has been that when there's a choice with the customer, he will choose private sector in most cases. Now somebody says, oh, this stock, but in most cases,
absolutely. So Samir, I think coming to the infrastructure part of the economy as well, I think there can be a lot of plays within the infrastructure space itself. So cement, pipe companies, you've got road development companies. Any view here, selectively or for the sector as well?
We don't buy any infrastructure. All the disasters of our life have been in infrastructure, and all the disasters of India have been in infrastructure. So you look at all the guys who have gone under. Not every guy was a chore. Maybe in the end you become a little bit because you are now surrounded by the banks and all, and then you do. But if you look at it, Lanco, GMR, GVK, JPA, Hindustan Construction, whatever, put some 10 more, SR bhi डाल दो, चाहे वो जो भी करे. So the point is, all of them had an angle of depending on government for some approval or some payments or some, you're having a fight, as in a legal fight, and you are owed some money, like all the Reliance Infra, all these guys won that arbitration. Nobody gave them money. Get lost. So previously we used to be very excited कि इसको road building order मिल गया है, इसको ये मिल गया, हम कहते हैं माफ करो, हमें नहीं चाहिए. So now the only one left is two. One is cement.
Yeah.
Because that is like a private sector thing. You get paid and you're not doing project for anybody.
Okay.
But we don't own. We don't normally like that. And the other one is L&T. वो एक big picture. So we own it. Because उसमें क्या है? Okay, we have one infra now. Don't trouble us. Let us concentrate on some 85. We don't engage too much. They are so complicated. But it is a one-stop shop. In case something good is happening, it is good if it doesn't happen. Okay. So that is, I don't buy infra anymore. We don't buy many of these things anymore. And we don't tell us that somebody's won an order from the government. वो तो बात भी ना करो हमारे साथ. पैसे नहीं मिल रहे उसको जितने मर्जी ऑर्डर ले आए.
Absolutely point taken, Samir Baji. In fact, हम लोग जो एक analysis कर रहे थे, the receivable days are so high for a lot of companies.
It's unbelievable.
One more sector that I wanted to touch base upon in terms of that fintech extension has been all these brokerage companies, including the recent ones and stocks like a CDSL or BSE, right? Where that entire digitalization theme is playing out. How do you view that?
Yeah, so broadly we like it. We don't have many stocks, but that I used to own before. BSE, we were again anchors. But But generally, this thing can work because this is a theme of, again, under penetration. So one more thing I have is that if you see the stocks that have done really well are only stocks that you can define in some context as under penetrated. For example, HDFC Bank grew some 20% for 20 years because at the beginning of 20 years, you could say it is under penetrated in the sense that you have to win from government, market share from state-owned bank. Aapki branches badi kam hai. You can keep growing those branches for 10 years. When you increase 10% branches, that's 10% more business after 2 years when that branch is a bit more stable. All of them are like that. As soon as you come totally penetrated, which means you are everywhere, like levers, like Colgate, like Nestle. You do what you want. You cannot grow more than 12% in our country. Nobody has ever grown. ये सब कहानी है कि we grew. They all grew because that time they were new in something. So all the ones where it is growing is, in some way you have to spin it कि it is new. For example, for tech, we used to say it is new for the world. आप एक Fortune 500 customer ले आओ, हमारा 20% revenue बढ़ गया.
Absolutely.
So they kept doing it. Now they can't because they are everywhere. So in that sense, I think this broking and all, I could still say in my mind that it is under penetrated because, India has some 2-3% people in trading or market or whatever, and therefore this could, in theory, be called underpenetrated. I think underpenetration is a big part of the growth. I mean, like if you say 5-10 years of growth.
Absolutely. Now, a couple of sectors where I think the big picture talk is happening over the next few years, Samir. I think one is renewables and one is electric vehicles. Your take very, very shortly on that.
So electric vehicles guaranteed to lose the whole world massive amounts of money. I mean, so much money that you can't imagine how much money.
Okay.
Because let us say there are 10 automobile companies that were there before.
Yeah.
Okay. Now those 10 guys were competing with each other, or 20, jitne bhi karo, 20 auto companies in the world were competing with each other, fighting for some market share and growing. Now you suddenly, now let's exclude all the newcomers like Tesla ko bhi nahi kar rahe. Hum purane 20 ki baat ho gayi. So these 20 guys now all have to move to electric vehicle, because even one of them cannot say I am happy with IC engine. All 20 have to move to electric vehicle. So all these guys spend money, and now from year 231, 2031, all of them are now making electric vehicle. अब फायदा क्या हुआ किसी को? Because nobody is saying that the number of electric vehicle cars when they come will be more than what currently. I mean, car growth नहीं change हो रही.
Absolutely.
There's no change in the fact that suddenly now, because of this, the car sales will go up. ये तो कोई नहीं कह रहा. They're just saying substitute one for the other. So first of all, you've all spent money. Now one guy will win because his electric vehicle car relative to others may be better than his IC car relative to others.
True.
Okay, so that is a different game. Oh, who knows whose will be. But now what happened is, when it was an IC car business, new guys were not interested. Now it became electric car business. So some new guys want to do it. Tesla, Apple, Xiaomi, Baidu, पता नहीं कौन, every guy who has electric vehicle angle. तो उसी इंडस्ट्री में जिसमें पहले 10 लोग थे या 20 जो भी थे, अब 5-10 मोटे मोटे नए चाइनीज फाइनीज टाइप आ गए. अब किसी को नहीं पता. So this India में I am amazed. Oh, this fellow is buying an electric car. So first of all, you don't know whether his car is any good. Maybe he has the worst electric vehicle car that the world has ever seen. And if it is as good, nothing.
Oh, absolutely.
It has to be better. Because the price also, nobody is saying that electric vehicle, I mean, today it is higher and then they give subsidy. Yes. But the game is that one day its price will have to be like plus minus today's price. And nobody is saying कि वो business में पता नहीं क्या margin ज़्यादा होता है, कम होता है. But bottom line is, in an industry which did not have new competitors, you have brought in 5-10 competitors.
Absolutely.
Plus there's more. So Apple and all, you don't know whether they're not going to make the car. They might design it and all that. So exactly. Now you see in private equity, now they're even funding car design where cars will be made by another guy, like they do in consumer durables.
Yes.
Abhi kya hota hai, car you make yourself. The new concept mein car may be made by some other fellow. And some other fellow means like this apna kya naam hai uska, wo jo Apple ke phone banata hai, Honhai, which is whatever it's called. So that fellow is the guy who makes mobile phones for
Apple.
This thing. They are now saying that we are going to make they are already started.
Yeah.
They are not saying it's for Apple, but they've already started learning or whatever is the word for auto outsourcing. Foxconn, correct. This guy saying correctly. Yeah, Foxconn. Yeah. So, which is parent is Honhai. Yeah.
So absolutely.
So EV तो गया, अब आपका आ गया renewable.
So solar, wind, बहुत चर्चा है.
Who's the customer? Please remind me.
More government at this point of time and then private.
QED. So उसमें very simple logic है. That every year the price of this power goes down. Okay, so for example, when these guys were offering to the government, say 10 years ago, this solar ke and wind ke, they used to give 8 rupees per unit or something. Then next year it became 6 rupees, then it became 5 rupees, now it is 2 rupees. So every day, everybody is worried कि किसी दिन government कहेगी वो पिछले वाला 8 रुपए वाला मैं नहीं दे रहा, मैं नहीं honor कर रहा, although it's like a sovereign agreement or whatever. So the best example of that is why, that India has higher valuations than other markets. For example, Nestle India is 80 times, Nestle Switzerland is 20 times or whatever. Okay. Colgate India will be 50 times, 15 times. So when a company cannot go public in India and goes public in the US, what does that show? The last renewable company, after 2 attempts in India, could not go public in India because Indian fund manager said, "Paise kaun dega?" So its company has gone there. It's a giveaway that it has been sold to Chamat Pehla Patiya and all these jokes that India will pay for all these things, and they may. But it's not a business.
In fact, I was reading an article, Samir Paji, where they said that modules for solar PVs, right, and polysilicon prices have shot so much, and custom duty badhane ki soch rahe government. So I think the prices are going to go through the roof. So,
but anyway, the thing is, a simple thumb rule rakhe, government के receivable को हम गिनते नहीं हैं as revenue. खत्म कहानी हो गई.
Perfect. So Samir Paji, I think almost an hour done. I think 3 more questions is what we'll take. Last 2 questions. One is on soft commodities, right? Sugar ho, rice ho, they have been
ये सब हम करते ही नहीं है because the thing is, ये मैंने सब करा हुआ है life में from 95 to now, but ये मैंने 15 साल पहले छोड़ दिए. Suddenly they'll say, so they would tell me Kenya में ये हो रहा है, Kenya में वो हो रहा है. No, sorry, not Kenya. So they would say tea is very good, tea में ये हो गया पता. फिर कहते हैं Kenya में वो ओवर सप्लाई हो गई. अब कीनिया तो मैं सोच ही नहीं रहा था कीनिया के बारे में. And sugar में the problem was this receivables and government, now they are saying okay ethanol वो सब चीजें, but we don't want this. We are happy with that.
Absolutely. The second thing is a lot of viewers have liked your shirt, Samir. So I think
ये तो अनोखी की है, अनोखी. I think
coming to the shirt part, right? Work from home, the apparel part of the business, again coming to that. And in fact, there has been some report that I was reading in terms of the innerwear business doing well, athleisure, as they say, comfort wear.
Athleisure. Athleisure.
So what's your views here again?
Yeah, no, athleisure is doing well. But उसमें क्या है कि global competition is very high. ये Nike वाइकी भी तो बनाते हैं ना, तो ये हमारे खाली हिंदुस्तानियों के नहीं चलेंगे. So for example, same thing, for example, I think one of the hottest sectors is cyber security. Okay. I mean, because the amount of attacks that are happening, even today, there's another story on, I forget which one, Financial Times cover story again on a cyber attack. And every day there is one. But the thing is, India में ये company नहीं बन सकती because these things are global. So you will buy something online. Suppose you're doing personal, as in laptop के लिए.
Yeah.
Of course, अगर आप business के लिए कर रहे हो, you will need some partner and all. Same thing with gaming. आप India का game थोड़ा खरीद लोगे.
Yes.
You can download a game. Why should you say this is an Indian gaming company? Sorry, who cares? Because game, you are not buying physical in a store. You're doing online. You will go to the best game that the world is producing. Not necessarily हमारे बंदे ने वो बना दिया है कुछ for kids or for big guys or whatever. So some of these things are in that. Now, innerwear में भी मुझे लगता है कि the competition from the global guys is also very high.
Yeah.
But anyway, which are the companies for innerwear?
Page industry.
Innerwear नहीं, sorry, leisure. थोड़ा सा है. That's a very small part. Yeah, and you can see the numbers. 5-year growth is 7% or 10%. I mean, we have anything which is up, you can do another business, but you must grow more than GDP of India at least.
The one sector that you liked, and the last 2 questions here, the one sector that you liked, Samir, was specialty chemicals. So I think within that space itself, right? I think China plus one, export opportunities. Any particular names that
we own 1.5 names, you can say, one small position and one like 4-5. हमारे लिए 4-5 is a big position, and 1.5-2 is a small position. So we have like 5% or maybe 5.5%. Pune में से हैं 6 तो नाम है 10 नाम है. But now also I think that is also, even though we own, I think बहुत हो गया. Because now if you see their guidance, now their guidances have come down to 15-20%. They've been growing at 30-40%. Once you grow 15-20%, you become like a normal good company, which still is good.
Yeah.
But then, their multiples are like consumer companies now or tech companies, 40 multiples.
Exactly.
So it's a bit too much.
Exactly.
But अभी वो चल रहा है, and because last 2-3 years अच्छे पैसे बने हैं, so you let it go for some time unless it looks blatantly overpriced in Indian context. So we let it be.
Absolutely, absolutely.
But it's not a very, I don't think it's a super hot sector now, because हो गया वो उनका, they have enjoyed, most of these stocks are 5-10 times or more.
Yes.
Not for us, one of them, but generally they've been up a lot. So it's not easy for ultimately being a commodity company.
Absolutely, absolutely. So one of the last questions now, Samir, and we'll end it here. And you've spent almost an hour and a half with us. I can see a pile of books behind you. They're actually hitting the ceiling right now.
That is not a pile of books. That is a bookshelf.
Okay. So
you can take out any book. You can take out any book. They won't collapse on you.
So our users are asking any good books that Samir Arora is suggesting from
that they should go on Twitter. I recommend all the time. The last book which I finished yesterday, which now my partner will read, it's called "This Is How They Tell Me the World Ends." It is written by a New York Times cybersecurity reporter. That's why I was excited, because that book will shake you.
Wow.
Will shake you out of this thing. And any bet that if there is a 0 to 100 scale of companies prepared for it, India will be at 1. Because we have not heard who's the head of cybersecurity for our government. Whereas here, there's a cybersecurity heads and SARs and czars and all that, and people and hackers, all that they have hired. They paint a story about the US, how they do. The name of the book is "This Is How They Tell Me the World Ends."
This is how.
If you can't get it, go and see it on my tweet.
Brilliant. We will, and I think
it's really good. Really mind-blowing book. Mind-blowing.
I will subscribe it today itself.
Yeah.
So
yeah.
So again, thank you very much, Samir, for taking
time
out. It was an hour and a half that you spent
Thanks
with us. It
Thank
was
you.
thoughtful. It was entertaining. It was with a sense of humor as well.
I don't do all that. I say truthful, because I say what I feel. If I read yesterday's book, that becomes my topic. I am live with you, and whatever I'm doing, I tell. I don't do stories. I do whatever is exciting me. I convey it, because that is. Thank you very much.
And we're highly obliged, and a lot of users benefit. Thank you so much, Samir. Take care. Bye-bye. And thank you, users, for joining in. Hope you liked the session. Thank you so much.